Okay, so if you're looking at the global markets right now, you might be feeling, well, a little confused. And honestly, who could blame you? It feels like we're getting pieces from three totally different puzzles. We've got precious metals going through the roof, some tech stocks crashing and burning, and a trade war that seems to be heating up out of nowhere. But what if they're not separate puzzles? What if they're all part of the same chaotic picture? In this explainer, we're going to try to piece it all together. To really get a handle on what's happening, we've got to break it down. We're looking at three distinct but connected stories unfolding across the markets, all at the exact same time. Each one is being driven by its own unique kind of fear, but as you'll see, they're all tangled up together. So here's our first clue. Silver. We're talking about a real, physical, tangible asset, right? And its price is just exploding. It's surging past $90 an ounce, hitting an all-time high. Now, you might think, oh, a classic flight to safety. But it's a bit more complicated than that. All right, clue number 2. At the very same moment that physical silver is soaring, the tech software sector is in an absolute free fall. A key fund that tracks this whole industry, an ETF, has plunged by a fifth just this year. That's not a correction, that's a panic. And then, our third and final clue. Seemingly out of the blue, a massive new 25% tariff threatens to completely unravel global trade, injecting a huge dose of political uncertainty right into the heart of the system. Okay, so let's tackle that first front where the market is getting absolutely rocked by a deep, deep anxiety about technology. This is all about a sudden, almost terrifying fear of what's coming next. The panic really kicked off right here. An AI startup called Anthropic unveiled this new desktop assistant, Claude Cowork, and the market immediately saw the writing on the wall. The implication was that entire business models, these companies built on expensive, specialized software, well, they could be made obsolete, and not in 5 years. We're talking like overnight. And this really captures the central conflict, doesn't it? On one side, you have that old, established software model. You pay high subscription fees for access to their specialized data. But on the other side, you've got these new AI tools that can automate the exact same complex tasks for a tiny fraction of the cost. So investors are now asking a really brutal question. Is the old model basically dead? But here's the fascinating part. This isn't the entire tech world catching a cold. The sell-off is incredibly specific. I mean, look at this. While that software fund is down big time, the Magnificent Seven index, the giant companies that are actually building the AI, is almost flat. So this isn't a panic about AI itself. It's a panic about who's going to get left behind by it. And this quote from Deutsche Bank just perfectly captures the mood on the street. These aren't minor corrections we're talking about. They are, as Jim Reed says, brutal moves. Billions upon billions of dollars have been wiped from company valuations. The market is aggressively and painfully trying to reprice an entire industry's future. Okay, let's switch gears completely and move to our second front. This one is driven by a totally different kind of fear. This isn't about the future, it's about a profound distrust in the financial system as it exists right now. So why is silver at $90? It's not just one thing. It's a perfect storm of four powerful forces all converging at once. You have what is basically a credit crisis in so-called paper silver, a supply shock coming from China, new demand from central banks, and a surprising surge in industrial use from, of all things, the AI and nuclear sectors. You see, for decades, the silver market operated on this wild system where paper claims on silver, like futures contracts, outnumbered the actual physical metal by as much as 356 to 1. The whole game was based on one simple assumption, that not everyone would ask for their real metal at the same time. Well, in early 2026, that assumption completely failed. Big institutional players lost faith in the paper promises and started demanding physical delivery. And in just 1 week, more than a quarter of all the registered silver in the COMEX exchange was physically pulled from the vaults. This is the equivalent of a bank run, but for precious metals. This whole situation leads to a crucial and pretty rare market signal called backwardation. All that means is that the price for silver you can hold in your hand today is higher than the price for a promise of silver in the future. The market is literally screaming that it needs physical metal now, and it doesn't trust that it will be there tomorrow. And here's what that squeeze looks like in real numbers. The cost to just borrow physical silver has absolutely exploded. It went from a historical average of almost nothing to an 8% annualized rate. Think about that. Someone is so desperate for physical bars, they're willing to pay that insane rate. It is a five-alarm fire signaling a severe, severe shortage. Okay, let's move to our final front, which is a very sharp reminder of how quickly geopolitics can just shatter all our economic assumptions. This is all about the return of raw political risk. So this policy, which was announced in January, is both simple and incredibly sweeping. Any country that trades with Iran will now face a 25% tariff on everything they sell to the United States. It's a policy clearly designed to isolate Iran by targeting its global trade partners.
But the policy creates this massive collateral damage. It puts major economies like China, Turkey, and India in a completely impossible position, forcing them to choose between their trade with Iran and their access to the huge U.S. market.
But the biggest risk here, by far, is that fragile trade truce with China. You see, China is Iran's top trade partner and has openly stated it will retaliate. So this single move threatens to reignite a full-blown trade war, throwing global supply chains right back into total chaos. So what happens when we put these three fronts together? You have the AI panic, the run on physical silver, and this geopolitical tariff shock. What does it all mean when you look at it as one big picture? What we're seeing isn't just random volatility. It's the market grappling with a totally new reality, one that's defined by three fundamental crises of confidence. There's a crisis of confidence in the future, driven by AI disruption, a crisis of confidence in the present, driven by distrust in our financial plumbing, and a crisis of confidence in the past, as the stable geopolitical assumptions we've relied on are suddenly being erased. And all of that leaves us with this final, crucial question. In an era of such deep uncertainty, when technology can erase industries, financial promises can break, and political alliances can just fracture overnight, how do we even begin to define what has real, lasting value?